We like the stock. We like the stock.
Just saw people buying GameStop in the beginning, and I thought, this is an obsolete retailer.
Wall Street Bets. Wall Street Bets.
Wall Street Bets.
Wall Street Bets.
Wall Street Bets and GameStop.
The thing is, this is not a regular short squeeze. We have a ton of enthusiastic young buyers in this market. They love to get behind stocks and flood all the social media sites with recommendations. Think Wall Street Bets on Reddit, the popular online information site. Right now, if you go to those sites, and I encourage you to take a look at this, they're populated mostly by younger readers and participants who are plain open, plotting to blow up the shorts. In this case, by buying GameStop at any price and bidding the stock up, and up to crush the shorts so they have to cover, get it taken up. It's incredible to watch. I think they're succeeding beyond their wildest dreams.
Ding dong YouTube, welcome back to the channel. I'm the Jobless Coder, and today I'm going to tell you the story of how a bunch of 20-year-old autistic kids on the internet were able to break the New York Stock Exchange. This is the most fun I have had all year long. I literally cannot stop laughing. This is hilarious. It's the funniest thing ever. If you have been on the internet at all this week, on any social media platform, you will probably have heard something regarding the stock exchange on Wall Street and GameStop and have literally no idea what's going on. It is so popular right now that even YouTubers that don't ever cover stock market, they don't ever cover financing, investing, stuff of that nature, even those YouTubers are talking about this. I mean, Louis Rossmann did videos on it, CoffeeZilla did videos, Tim Pool was even talking about it. All we need now is for Mr. Beast to make a video with the title and the headline, I invested $1 million into bankrupt companies and the price of these stocks are going to go through the roof. At this point, they're now referring to it as the meme stock market. The stock market is broken, and we broke it. The stock market no longer runs on fundamentals analysis of finances and the economy and the companies' earning reports. The entire stock market right now is being driven by a handful of a select few companies that are being run entirely on memes and tweets from Elon Musk. By the time this is done, GameStop will nearly have bankrupted 100 or so investment firms on Wall Street. And the Reddit community, r/Wall Street Bets, is now the world's largest unregulated trading firm, run by 20-year-old autistic kids. Now, you're probably thinking, if you've seen any news report or any article about what's happening on Wall Street right now, oh, Evan, how is this good? How is this legal? How are these people not manipulating the market? How is this not market manipulation by coordinating all of these people to drive the price of the stock up illegally? Well, I'm going to explain to you the setup for how this was even possible in the first place, and you'll start to see that all these people on Reddit that are doing this right now, buying up GameStop stock to drive the price up, they're not the bad guys. The bad guys are the investment firms that short sold 130% of this stock. So if you don't understand anything about the stock market, I'm going to explain it in very simple terms for you now. Basically, when you buy a stock, you're anticipating that the price of the stock goes up. That's what they say, buy the stock and then buy it low, sell high. But there's another option when it comes to stock market trading, and that is known as short selling. Basically, what you do is you take out a loan from the bank at a certain percent interest rate, and then you would buy the price of the stock and immediately sell it and collect that loan. And so what you're doing is you're buying up contracts from somebody who holds on to that stock with the agreement that you will be paying them interest on the loan. The agreement that you will buy the stock at a future date. So what you're doing is you're hoping the price goes down. So say, for example, you bought a stock and you took $1,000 on a short sell, and then the stock went down to $500. Now you can buy that stock for $500, and you've gotten $1,000, you make $500 profit in the difference between, $1,000 to $500. The $500 profit is yours. So you're anticipating that the stock will go down. And by doing this, it also inadvertently drives the price down. When you sell and when you short sell, it drives the price down because it's a supply and demand chain. When you buy the stock, it drives the price back up. But what happened was a bunch of these investment firms over the course of several years now have driven the price of GameStop stock. They've driven it from, $20 $25 basically down to zero. They drove it from $25 down to $3 by short selling it, and essentially bankrupted the company that way. But here's the thing. They could have sold, right? They could have short sold it at $25. The price goes down to $3, which means they buy it for $3 and they make the difference. That's almost 1,000% increase in profits. They could have sold out, but they didn't. They kept short selling, anticipating that it would go further down and further down and further down. A year ago, the price of GameStop was about $3. But what they weren't anticipating was that in a year's time, the economy would be shut down. All these millennials that are out of work because they've been fired from their job, or they're underemployed, or they're working in the gig economy, they're getting stimulus checks in from the government. They've got several $1,000s now stored up in their bank account. What these investors were not anticipating was that these people would actually do the research and realize that, holy shit, not only have they been continuously short selling GameStop stock, but they've done it to the point that it was oversold at 140%. That means that they shorted the stock at 140% of the shares that were even available in the market. Imagine if you sold somebody 2 cameras, but you only had 1. You're a con artist. This is where the manipulation comes in place. It's not these people on Reddit or on Twitter or wherever else they're coordinating. It's not the people on YouTube that are talking about this and everybody is now buying up the stock. They're not the ones doing the manipulation. The manipulation was the investment companies being able to short sell 130% of a stock, which probably should be illegal. So now, essentially what happened was there was 4 main events that triggered an uptick in the price of GameStop stock from $3 last year, and then it started going up. In December, obviously late November, December, they had the release of the Xbox One and the PlayStation 4. That caused an increase to about $15. It went from $3 to $15. The next thing that happened was, I guess 3 executives for the company were either fired or they left, and they got 3 new people to come in. So they've got a new CEO, I think a new CFO, or a new COO, or whatever. But either way, 3 high-level executives have now taken over the company, and apparently they have a fairly good track record behind them. So they're looking at revamping GameStop from essentially a bankrupted retail brick and mortar store. They're trying to revamp it into some kind of digital online retail store. And what happened was, at their quarterly earnings report at the end of December, they reported a 300% increase in profits from the sale of online goods, now that everybody's buying everything online. Now, the fourth and final catalyst to this is that Melvin Capital, I believe it was Melvin, it might have been one of the other investment firms, but somebody posted about their shorting positions on Twitter. And so somebody else noticed that, and then it got brought up in the WallStreetBets forum, on the Reddit forum, and people started talking about it. And they say, oh, what's that? You are betting that the price of the stock will go down? Well, you know, it's $3, so maybe I'll throw in $30, buy up 10 shares. And so the price goes up just a little bit. I mean, 10 shares is not a lot for one person, but if you've got 1 million people coordinating and they're all buying 10 shares, then the price goes up a little bit. From $3, it goes up to $4, and then it goes up to $5. And at this point, it was already up at 15 from last December, and so then it goes up a little bit more. So then other people see, oh, the price of the stock is rising, I'm going to buy a bit more and hope that it goes up. And by buying more, it goes up. Now, here's the thing. The higher the price of the stock goes, the more money these investors need to spend to cover basically cover their shorting positions. And so it goes up, and the higher it goes, the more money they're losing. And you might say, oh, well, why don't they just not cover it? Why don't they just hold on to it? Because eventually it's going to go back down to $20, $5, or whatever. The problem is interest. And essentially, the interest for GameStop stock, last I checked, was somewhere in the range of 83%. Now, full disclosure, I'm not a CPA, I'm not a licensed financial advisor, whatever, you know the gist. I have no idea whether or not this is accurate, but essentially if it is, that means that all these people, all these investment firms that have short sold the stock expecting the price to go down, they're paying 83% 2% interest on their loans to their brokerage. And so the broker might call them up and be like, hey, well, you're good to cover the position at the current rate, $23, but if it goes up to $50, we're going to need the money because you can't keep hemorrhaging the money. And so then it goes up to $50 and then it goes up to $60. Here's the best part of the situation. When these investment firms finally bail out and they take the loss at a specific rate, essentially what they're doing is they're buying up a whole bunch of stock to then cover their position. By buying it up, it sends the price up again. And so it's like pouring gasoline on a wildfire. It creates this circular feedback loop where the more people that buy the stock, the more it goes up. The more pressure is put on these investment firms to sell out of their positions. They buy up more stock to cover their shorting positions, causing it to go up again. And it just goes on and on and on. That's why it went from $5 to $15 to $30. And then Monday morning, when the markets opened, it was up at $80. Now it's trading somewhere around $400. And by the end of Friday, it'll probably be over $1,000. And I still see all these boomers or whatever, financial professionals with degrees and MBAs or whatever on the news talking about, oh, this stock is way overvalued. The GameStop is not worth this much money. There's no way. They're not paying attention to what's happening. The price of the stock is no longer tied to the financials of the company. The price of the stock has absolutely nothing to do with the company or their finances or their business plan or even the fact that they want to, convert into some online retail store. Right now, the entire thing that is driving the market is number one, memes. Number two, Elon Musk tweets about something and the stock increases basically instantly like that. Number three, the third most driving factor for this increase in the stock price and all these people now buying into it is to stick it to the man. We are giving them the middle finger right now by making them hemorrhage money. We are bleeding them dry. Melvin Capital has lost $5 billion over the course of 3 days. And then their parent company, Citron, gave them another $3.5 billion loan to cover their positions. And you want to know what these jackasses did? Instead of covering their positions and taking the loss, they doubled down. Have fun going bankrupt. It's this raging wildfire right now that isn't likely to stop anytime soon because the more news this is now an international news story, and it could actually cause the stock market to crash as well because it will go up. GameStop will go up. It'll probably go over $1,000. Hell, it might even reach $4,000 or $5,000. But at some point, it will crash, and it's going to take the whole market with it right now. GameStop is now a $20 billion company. Pretty good for a bankrupted brick and mortar store. GameStop owns 10% of the S&P 500, that being the 500 largest companies on Wall Street. They average out for the S&P 500. It's an ETF fund. They own 10% of the market right now, and the whole thing is being driven by the stock. The whole stock market right now is being driven by GameStop, and it's not just because people are buying up shares, but they're selling out of shares for other companies in order to invest into GameStop to ride the rocket on the way up. And all the people on the news, these professional investors that are professionally trained with degrees and MBAs or whatever they've got saying, oh, these people, they're going to lose so much money. Well, here's the thing. They don't understand the mentality of the people that are doing this. These people, most of them, are investing only a few $1,000s. And they've got it in their savings account, and they can lose everything. They can go bankrupt and destitute and lose everything, and they don't care. Because at the end of the day, they're losing $1,000. These investment companies are losing billions. They are hemorrhaging billions of dollars right now. And ask yourself this, who do you think is going to break first? Who do you think? You know, the guy who's got $1,000 spare dollars lying in his savings account that he's invested into GameStop stock? I mean, maybe his rent is covered. He's got food in the fridge. He has a bit of extra money on the side. He can afford to lose that $1,000, and it can go right down to zero, and he can lose everything. All the while, these investment firms are losing billions and billions of dollars, driving them to the edge of bankruptcy because of their greed. And the people on the news have the audacity to try and paint the Wall Street Bets people as though they're a bunch of retards. Well, we are retards, and we self-identify as retards, but they're uneducated and they don't understand anything about stocks, and they're manipulating the market, and this is illegal. But like I said before, it's not illegal what's happening, the coordination. How is this any different? Jim Cramer came out on CNBC News defending the Wall Street's bet people.
See, they're not. What kind of case do they have? We like the stock. We like the stock. I mean, that's the get where Ryan Cohen got in. He bought 15% at $8. He's on the board. We like the stock. How is that bad? Or do you think that they're concentrated and doing some sort of manipulation if they say they like the stock?
Well, I don't know if they're concentrated because I don't have subpoena power and I can't really go out
that's
and look
always
at it.
been your problem.
I could argue I don't even know if there are foreign powers at work here behind the scenes trying to make chaos of our markets.
Let me ask you this, Jim, because I think Mike Santoli.
Because he said, how is this any different than, a financial investor getting on Bloomberg TV and saying, well, these are with their suit and tie all tied up, and these are the stocks to look out for today. These are the stocks we think are going to go up. These are the stocks we think are going to go down. And everybody who's watching that is like, oh, well, I don't know much about finances, but if the professionals are, telling me to do this, I'll put some money here, I'll put some money there, I'll follow their guidance. How is that any different than a bunch of 20-year-old retards on Wall Street Bets saying, hey guys, let's buy the stock and never let go? And that's what they're doing. They're buying it at whatever price they can, and they don't plan to let go. And by the end of it, they may not want to let go. By the end of the week, shares of GameStock are going to be worth more than Tesla. And a bunch of people are probably going to sell out of at least some of their positions and reinvest back into Tesla. But the craziest thing is, GameStop is not the only company that is oversold on the shorting position. There's way more other companies, AMC being the next. They talk about Bed Bath & Beyond. Nokia is another one that's being thrown around and talked about. All these companies, what do they have in common? They're essentially bankrupt. AMC is a bankrupted movie theater in the States, and their shares yesterday were at $5. Today, they were trading at the end of the day around $20. On the German aftermarket this evening, they'll probably shoot up to $40, and they'll probably open at $50 tomorrow morning. And everybody's going to want to pile into that as well. AMC, what is AMC? It's a bankrupted movie company. And this is the funniest part of the entire situation, is that all these companies are essentially bankrupted, and the millennial kids that are investing into it, they're giving them another chance. They're giving them another opportunity to exist. I don't think GameStop is going back to $5. It will go down at some point eventually, but I think it's going to be at least over $100 stock for the foreseeable future. And this is what's called a short squeeze. Essentially what you're doing is you're holding on to the stock, which means that there's less available in the floating shares. There's less available for purchase, which means anybody who has contracts on the shares that are floating in the pool, they can drive the price higher and higher. So if Melvin Capital needs to sell out of 60 million positions and there's only 2 million available, well, those people that are holding the 2 million can jack the price up as high as they want. And then Melvin Capital is bleeding money as they're going out of this. And so you get these massive spikes and then a massive drop and a massive spike and a massive drop. But overall, the squeeze is very slow and steady. And you'll notice that there it goes up and it goes down as much as some days $150 up and then back down. But at the end of the day, it always, over the last 3 days, it has gone up in a steady trajectory, and it has always closed out higher than it did the day before. And then what happens is when the stock exchange over in Germany opens up, they drive the price up again. So then it opens up here in the morning in America and North America, and then the price gets driven up yet again. And the prices right now are fluctuating to such degrees that it's triggering literally stock market circuit breakers every 15 minutes. Now, if you don't know what a circuit breaker is, essentially the stock gets shut down for 5 minutes. You can't buy or sell that stock for 5 minutes. And the idea is if there's a lot of momentum either up or down, it's to help prevent the market crash. Because if the market could just keep going down and keep going down, and it just was going further down, and they didn't have these intermediate circuit breakers, then you could see an event, like 1929 stock market crash. Likewise, if it's going all the way up, then you're going to see this manipulation, or they call it manipulation in the market. And so that's what the circuit breaker, they're triggering. Like Nokia triggered the circuit breaker at least a dozen times today. It's hilarious. So I also want to thank Louis Rossmann for his video on Sunday about what was happening on Wall Street Bets, because that was how I got first wind of this, and then I went to the forum and checked that out. I was already a member on Wall Street Bets. I watch a channel on YouTube called Kamikaze Cash that talks a lot about Wall Street Bets. It's pretty funny. He's a pretty funny guy. You should go check him out. And so I found out about what was happening from Louis Rossmann, and then on Monday I started trading. I had already opened several months ago, last year, I'd opened an investment account with RBC, and I've got one on the Wealth Simple trading app. And so I'm like, oh, well, I'll put a few $100s here and a few $100s there and see what happens. I made $600 in half an hour. Like that, $600 in half an hour. I've made more money in the past 3 days than I literally have all of last year. And if this keeps going, I could actually, start making real profit doing this. And like I said before, it's not just GameStop. It's all these other companies that are essentially bankrupted and short sold all the way down. And the thing is, their stock value was at what, $5, $10, $20 even? Who doesn't have, an extra $20 in their couch that they can put into buying a stock? And if the price goes up to $200, that's a 10% gain on your initial investment. And like I said, who doesn't have the money to do that? Everybody has it. And if you look at it, right, you've got 3 million people now, 3.5 million people on Wall Street Bets forum. They've had 1 million people join their community in the past 3 days alone. If you take $1,000 on average per person, because some of them are doing ridiculously risky moves, like $10,000, $50,000, like I'm going to mortgage my house and put everything on the line with GameStop. And then you've got other people that are like, yeah, I'll do $100. So on average, if you've got $1,000 per person and all 3 million of them are investing into the company, that's a $3 billion hedge fund. That's not insignificant. That's actually a pretty big player in the market, especially since they were successfully able to drive Melvin Capital into the ground. Andrew Left is shitting his pants right now with all the money he just lost, and we're just sitting here laughing our asses off because it's hilarious, right? It's hilarious. Why is it that these stock market investors and these brokers, they can manipulate the news to their advantage? They can get big bailouts from their friends in Washington. They can get, $3.5 billion bailouts from their parent companies, and then turn around and double down on their positions. Why is it that that's allowed, but when we buy $1,000 worth of shares each, we're the bad guys because we're manipulating the market? No, it doesn't work that way. It doesn't work that way, and we are calling their bluff. This is quite literally Occupy Wall Street 2.0. You want to know why Occupy Wall Street failed? It's because it didn't do any damage. So what? You set up a tent in the park for 6 months, maybe you smash some windows or whatever, destroy some office building, and then what, they pay $1,000 to fix the windows, and then the police come in and arrest a bunch of people. Occupy Wall Street had a good intention, the 99% against the 1% wealthiest people who, like I said, they manipulate the market, they get bailouts from their friends in Washington. The problem with Occupy Wall Street is that it didn't do anything financially to them. But this is doing far more damage to these jackass billionaires on Wall Street than anything that you could possibly do. And why? Because we're playing the game. We're playing their own game with their own rules, and we're playing it better than them. And they are literally shitting their pants right now, and they are on the news trying to demonize everyone on this Reddit forum and try and get it shut down. The CEO of the New York Stock Exchange is talking about the SEC, whatever, investigating malfeasance and manipulation of the market and everything that they can possibly think to throw at this. And at the end of the day, if you lose everything, what have you lost? $1,000? If it can bankrupt 100 billionaires on Wall Street, I think that's worth it. I'll pay $1,000 and I'll lose every last penny of it. The other thing, too, that I want to mention before I end the video is that I mentioned, right, the shorting, how the shorting works, how you have to take a loan out and then you pay back later and then you pay with interest. Not everybody can short because you need something called the margin account. And the only way to get a margin account is if you go and you talk to the bank and they open up a margin account, and then it's all based on your credit score and whatnot and the amount of money you have saved in the bank and maybe the job you have. They all factor into it. So not everybody has, $1 million worth that they can just borrow from the bank and buy a bunch of stock with the agreement to, or sell a bunch of stock with the agreement to buy it up later. Not everybody has that opportunity, but these people. And so, like I said, they're betting that the price goes down. It goes all the way down. It goes down to $3, and they're so greedy they don't take their 1,000% gains at the $3 mark. They say, we want it to go down further. We want it to go right to zero. So now you've got these 20-year-old kids, see it, though, $3. I got $3. You have $3. My friend is $3. And they coordinate on Twitter. They buy 10 shares each at $30, and the price goes up. And that's essentially what's happening right now. But I want to hear your thoughts in the comments below. Let me know if you think this is as funny as I do, because I'm dying laughing. I haven't laughed this hard in a very long time. And if you're looking to open an investment account, you can use the link in the description below with Wealthsimple. It'll give you a $10 reward when you deposit $100 into the account. Wealthsimple is the only app that I'm aware of in Canada for Canadians that can do trading, because other apps like Robinhood and Webull, you can only do it if you're in the States. It doesn't have some of the features that Robinhood has, like fractional sharing, so you can't just buy a fraction of a share. You have to have the money outright to do that. But it's really good. You can do an e-transfer from your bank, and then the money gets deposited and it's available for trading in 5 days. It doesn't have any fees at all on the commissions. So usually, I also have an RBC trading account. On that, it's a $9.95 trading fee for every time you either buy or sell. You need to have that on top. So if you bought just one stock, if you bought one stock at $6, you're paying more money in the trading fees than what the stock is actually worth. So you typically have to buy, 10 or 100 to make it worth your while. Well, on Robinhood and on Webull and on Wealthsimple, the Canadian app that allows you to do this, there's zero trading fees at all. So you can buy at $6. If it goes up to $6.50, you can sell and you make 50 cents, just like that. No trading fees involved. So if you want, check it out. Link in the description below. You use it, and then you'll get $10 free when you deposit $100. And other than that, I want to thank you for watching the video, and until then, I'll see you in the next one.